Hello and welcome to Renovation Uncovered, a series of podcasts from Renovation Underwriting. Think of us as your renovation survival guide. My name's Daniel Fox, and in these episodes we'll journey through your property renovation from concept to completion. This episode is called What Your Contractor Isn't Telling You About Insurance.
They tend to embark on an insurance conversation once a year and then assume from there on in they're covered whatever they're doing. And of course we know that's not the case.
Builders and insurance then. I just have this sneaky suspicion that it's not something they really know much about, just as I don't really know about building. So my first question to Douglas Brown, MD of Renovation Underwriting, was on builders and their insurance. How much do they actually know?
A lot depends on how they buy their insurance. So if they're very small contractors and they're buying their insurance online, then, maybe 1 to 5% actually really understand what they're buying. The cost of contractors' insurance is varied to a greater degree by what they need to cover. So to give you an example, if somebody doesn't need hot works insured.
So let me explain what hot works are, because I assumed I knew and was wrong. In property renovation insurance, hot works refers to any activity involving the use of open flames, heat-producing tools, or other sources of ignition that can pose a fire risk. So we're talking about welding, soldering, brazing, cutting, grinding, and anything else that makes heat.
They don't work over a certain height, they don't dig below a certain depth, and they're only using certain types of machinery, then their insurance might be quite low. But let's say, for instance, you're effectively a one-man band and then you win a contract for something bigger and you become the main contractor, and then you're hiring in digging machines and all that sort of stuff, and you need to dig down to 5 metres when your liability limit's 2, or you need to put guys up on scaffolding that's 40 feet in the air when your limit's only 20. You can see how these things go wrong quite quickly. Because what doesn't happen is that contractors generally don't contextualise every project they do with the insurance they've got. And so what they'll tend to do is buy the cheapest insurance they can find, because that's the requirement, and of course nothing's ever going to go wrong. And then they find out that actually it's not quite what they thought it was. So I'll give you an example of this. And you can see this on our website. It's a guy called James Hobby. James had a builder in to do a loft conversion. He caused a collapse, which led to the serious injury of 2 or 3 other people, including James's son. His liability insurers were Direct Line, and what they did was reserve their position. In other words, not pay out, just say they were investigating. And they did that for 7 months. In the meantime, James had to fund the rebuild of his house himself and his alternative accommodation, so that wasn't great. Fortunately, he could afford to do that, but it didn't leave him in a great position. What was interesting, though, was that the liability insurance that the builder had didn't operate at all in the end. So what happened was that Direct Line rummaged around to try and find something, because they knew it was going to be a big claim. They rummaged around to try and find something that they could use to turn the claim down and cancel the builder's insurance. And eventually they found 2 county court judgments that were against the builder, one for 2 doors that he hadn't paid for, and one for a parking ticket that he didn't even know he got. Now, on that basis, they cancelled his policy as though it had never been in effect, returned his premium to him, and then he was effectively on his own. So just because a contractor's actually got insurance doesn't mean that that insurance is going to pay. And that's a really important principle to understand. And even though a number of us in the insurance profession intervene to try and coerce Direct Line to actually pay, to shame them into doing it, they were having none of it. The reason it took them so long is that they took their own case to judicial review to make sure they could get away with it. That's how far unscrupulous insurers will go. We decided that we buy an insurance policy from Direct Line, we'd pretend to be a builder, and we'd notify them of 2 county court judgments for the exact infractions that they'd repudiated the builder's policy for. The insurance went straight through. So it wasn't really a factor that they would use to get out of insuring someone in the first place. The contractor had unwittingly given them an opportunity, because he hadn't declared it, to cancel his insurance, and that's exactly what they did.
I think you'll agree that is a truly staggering story, and a reminder of why full and complete renovation insurance is a must for your project. If you've been listening to the whole series, you'll remember that I asked Lynn Toynton about communication in the previous episode, but I wanted to pick Douglas's brain on how you talk with your contractors.
So this is where a JCT contractor joint contracts tribunal contract is really useful.
You probably know this by now, but they're a standard suite of contracts used by the building industry to deliver your project.
It can help you have that conversation because it's very specific about who's going to insure what during the work. So that gets you out of the, do I really trust you? Will your insurers pay if something goes wrong? What are you actually insured for? One of the pieces of work we do as underwriters quite often, and always on larger projects, is ask the brokers and the property owners to get a copy of the contractor's insurance so we can have a look at it. Some of it isn't worth the paper it's printed on. So a lot of builders would insure with non-household names, and I think that's a big thing. So if your builder's insured with Allianz, Zurich, Aviva, all of whom, who's the other one, be Munich Re, HSB, those are big names in the construction market, and you could expect those insurers, provided the contractor has acted in utmost good faith, to do the same. Okay? When you start insuring with low-rated insurers, then actually what they're really doing is supplying just a piece of paper that gets that contractor through the door. They're not supplying it with the intent of providing a safety net, which is what insurance is all about. So if you're not going to go down the route of a JCT contract, then actually ask the building contractor for a copy of their insurance, and you want to see the schedule of insurance, which will tell you what's insured and for how much, any endorsements that apply, which will tell you whether they're covered for hot works or there are height restrictions and things like that. And then finally, the policy wording, which will show you what's insured. By the time you've done all of that, we all have busy lives, you probably have been better off having a JCT, getting this from the builder, giving it to an insurance broker who understood what they were looking at, and buying just some proper renovation insurance, because it's just a false economy not to.
If you've listened to previous episodes, you'll know that we've talked about home insurance and what it doesn't cover, and we've talked about renovation insurance and what it does cover. Remember, it's 100% of the cover for 100% of the premium. But builder's insurance, what about that? Does the cover differ from policy to policy?
A lot depends on how their insurance is contextualised within the market that they're operating in. So massive contractors like Walter Lilly, who are an R.W. Armstrong, who do all of the top-end work in London and all round the country, are brilliant people to work with. They have their own insurance department. They understand the insurance play completely inside out, and they're just great. Other contractors, particularly in the sort of medium to lower tier spaces, that's where you're going to get potentially big problems with the type of insurance they're buying, because what they've actually got may not transfer well or track well into the projects they're actually doing. And they tend to embark on an insurance conversation once a year and then assume from there on in they're covered whatever they're doing. And of course we know that's not the case. So actually, if you're really smart, then you'll get your broker to have a look at the insurance cover that the contractor's providing, and then contextualise that for you and tell you what they're insured for and what they're not.
It almost feels a bit like contractors' insurance is a ticket to ride. It's something that they have to have in order to be able to work. So some builders will naturally be looking for the cheapest entry point possible.
You're exactly right. So there are some, and we particularly have an issue here with labour-only subcontractors. So let's say, for instance, the builder that's going to do your extension has said, yeah, I'm going to have a few guys who come along and help me, but actually I'd rather you just paid them in cash at the end of every week. Who's actually employing those guys? Is it you or is it the contractor? My betting is that the contractor doesn't have any employer's liability. Okay, you haven't bought any employer's liability. So actually when that person falls off a scaffold, is it your fault, the one who's actually running the site? Or is it the contractor's fault who put up the scaffolding? Or is it the scaffolding firm? Who is it? And what we tend to find is that a lot of these labour-only subcontractors who are working for cash or something similar will claim that they're self-employed forever and ever until something goes wrong, and then of course they're employed. When you look back at the experience of COVID, I'm sure one of the reasons that building got back on its feet quickly was that all those self-employed people weren't eligible to start with under the furlough schemes that came out pretty quickly afterwards, and because a lot of them were living hand to mouth, they had to get back to work. And it was one of the few situations where that really tripped a lot of people up. And, you know, there's not always an intent to defraud the tax system or whatever it's going to be. It may just be pure convenience that means you end up doing it that way. But getting those liability insurances wrong and your main contractor turning around to you and saying, well, I'm sorry, mate, you were paying them. They're yours, they're not mine. You can see how these things sort of spiral out of control. And I've had situations on sites where I remember probably the first one I had was a plasterer who was standing on a milk crate, quite a tall bloke, standing on a milk crate to plaster the ceilings. He slipped off the side of the milk crate and broke his ankle. He was a subcontractor to the main contractor. He sued the main contractor, but he also included as co-respondent in the county court action the property owner. So they were made co-respondent. Now in that situation, the insurance that we had in place actually defended the property owner, and the contractor's insurance picked it up, and that was fine. There was a JCT contract in place and it was all straightforward. But it's not always the case. So if you don't have a contract, if your builder hasn't got the proper insurance, if you're paying people cash in hand and all those sorts of things, then you're not only making it difficult for people to support you in all sorts of ways, you're actually creating problems that could lead to you having to shell out significant amounts of money for you to defend yourself.
Most homeowners, it's fair to say, approach projects from a point of ignorance. After all, they might be a dentist or a gardener or a teacher, and the world of building is a million miles from the world they know. So how does a homeowner gen themselves up and give themselves the knowledge they need? Well, actually, the answer is a lot simpler than I thought.
The simplest thing to do is to pay a professional to do it. But people really hate doing that. Professional fees is an interesting part of building projects, and probably, I would say, in London could account for up to 20% of the build cost. More likely in the provinces, 10%, something like that. When you pay professionals to actually do that work for you, they carry professional indemnity insurance, and because they're doing it all the time, they know what to look for. That's the reason that you'd use an insurance broker. If they gave you terrible advice, then you'd sue their professional indemnity insurers, and that's what they're there for. It was interesting, when we did the focus groups in 2018-19, we did 2 in London, 1 in Birmingham, 1 in Manchester. What we found out was that most people do a statement renovation once in their lives. So they've got unless they're in the industry, they've got no acquired knowledge of what to do during a building contract. And it's a little bit like walking into a pitch black room with holes all over the floor. You're trying to fall down them, but you don't know what you don't know. And what I found shocking when we first started in this class of insurance 13 years ago was that none of the professionals, the normal professionals that you'd see as being intrinsic to a renovation project, actually mentioned insurance. So the architect didn't, the structural engineer didn't, the contractor certainly didn't, because he thought that might cost them some more money. And so you end up with a situation where, as far as insurance is concerned, nobody's taking any responsibility, and it's up to you, the homeowner, to actually cope with or have a strategy for making sure you don't miss anything. So during the focus groups, what we found out was that nobody had any acquired knowledge about insurance, and only 15% of them had bothered actually to engage with their insurers at all, and only one of the people out of 54 thought they bought some more insurance from their insurers, but they didn't know what it was and they didn't know how it worked. Okay? Because most insurers, when they're told, limit cover on the property that's actually being worked on, then people get a little bit lost, or they assume that that's just what you have to put up with. And so it's only those people who really use a broker who say, well, actually, I'm not really happy with that. What do we do now? Or the broker says, actually, we've just got to sort something else out for you whilst the works are ongoing, that really tend to get or make the best of the situation. And we talked, and I actually got somebody who was nothing to do with insurance to take the focus groups because I didn't want to lead the audience. I was sitting at the back and watching. And what was so compelling was that at the start of the evening, we asked them to write down what they'd be prepared to pay for an all-encompassing works insurance and put it in an envelope. And then at the end of the evening, when they were cognizant of the risks they were running, we asked them to write down what they'd be prepared to pay for it again. And on average, that figure was 4 times higher. So when they really understood what risks they were running, then that sort of innate conservative, conscientious mind within all of them said, actually, there's no way I'm risking this. I'm actually going to do the right thing.
Having listened to Douglas, I've come to the conclusion that contractors' insurance, no matter how good it is, can actually never be enough.
You're actually right. Yeah. So you're always going, if you just exist with the contractor's cover and your own home insurance, then there are just holes all over that. And most of those are things which, if something happens, you or, perhaps you make the decision as husband and wife or husband and partner or whatever it is to not insure. But if one of you is making that decision on behalf of the other and something happens, you could imagine how well that's going to go. So, and actually regret and resentments are an enormous emotional drag that you've then got to carry around with you. So actually, when it comes to things that are as important as this, perhaps you'll settle for not having gold taps, have stainless steel and buy the right insurance. It's as simple as that. In the context of the project itself, the cost is, relatively speaking, so small. I think what doesn't help with the perception of the cost of this type of cover is that people always arrive to it late. So if you price it in right at the beginning of the journey, then that money's spent. By the time you've got hugely excited about bifolding doors or a helicopter pad in the garden or whatever it is you want, and actually, I don't know anybody who spends less than they thought they were going to do on their building project. I can tell you statistically that 87% of projects run over time and 92% run over budget. Okay, so everybody spends more than they think they're going to, and then to actually get asked to pay an insurance premium that you weren't expecting right at the time when you're skint isn't great. So factor it in at the start.
We've talked a lot about when things go wrong and how that could have been avoided. But I was keen to hear some stories of when it's gone right, when people took out renovation insurance and then really needed it.
When we've had very serious claims. One would be back in the early days, central London, London family, they were bankers actually, and they moved 2 houses down whilst their house was being refurbished, basement being put in. I think the entire contract was about 6 million or something like that. So they're moving out for 12 or 14 months, and the house they're hiring's £15,000 a week. About a month before the works are complete, the contractors are plumbing everything up downstairs, and the incoming main into the property, which was a big one because it needed lots of water, burst. There was a surge in the pressure from Thames Water and it burst. And so when the contractors arrived in the morning, the basement had turned into a swimming pool, basically. All of the plants, so all of the central heating, all of the electrical climate control systems for the house, all of that sort of thing, basically terminated down in the basement where the plant room was. So that was all flooded. I think the total claim came to about 800,000, and the alternative accommodation I think was 225 on top of that. But what was really interesting was that all of the Cat5 cabling that ran all the internet, TVs, all the climate controls, all that sort of stuff, came down into the basement. They hadn't been connected up to the server, the switch yet, and so all the bottoms got wet. Now, the cabling contractor and manufacturer wouldn't warrant any of those cables. So even though upstairs was totally unaffected, we had to rip out 14 kilometres of cabling all through the house, which had already been decorated and everything else, and replace it all. Now, they had proper insurance, they had our renovation insurance product, and it paid. Really good example of when it's done right, good JCT contract, absolutely fantastic. I'll give you another example, which actually in a lot of ways is a very sad example. So a couple retiring to the south coast bought a cottage formerly owned by the church, thatched cottage, beautiful view, you know, their vision for their retirement where they wanted to live. The church had a nasty habit throughout the centuries of renovating in inverted commas or repairing their housing stock in the cheapest way possible. And so at some time during the 40s or 50s, this timber frame and stone cottage had concrete blocks put on the inside of it and a concrete render put on the outside of it. Unfortunately, listed buildings need to breathe. It's one of our specialisms and we know quite a bit about it. But in this instance, we were distracted by the thatch element, which is normally such a massive fire risk. We're about the only people in the country that insure thatch undergoing works. And in fairness to the people concerned, they had all the local SPAB listed people, listed buildings people come round and give them advice about what to do. And a good local contractor who was used to dealing with listed buildings to actually come and do the works. And they started to take this concrete render off the outside of one of the main walls. And as they were doing it, the whole wall collapsed. And the council again turned up and said, we think this whole building is unsafe. Now, there's a warranty in our policy that says pre-existing defects are excluded. But in this instance, the property owners couldn't do a structural survey before they bought it because it would have to have been destructive in part. And even though we could have walked away from it, we actually didn't. We ended up paying over £1 million to clear the site, and they're building a facsimile really of what was there before. But if they'd been relying on their own insurers or hadn't had the proper insurance cover, you know, the contractor wasn't negligent in this instance, the church were, but actually they didn't give any warranty when they sold it, so it was a commercial risk of doing a renovation project. And going back to what I've said before about the quality of insurers you deal with, the intent of what we do isn't to avoid paying claims to people like these who had dealt in absolute utmost good faith and done all they reasonably could. We do all we can to pay all we can. And, we even insurance people need to sleep at night.
Some great examples there of when renovation insurance saved the day. Earlier in the podcast, we talked about using a team of professionals to help steer the project. But what if I'm adamant that I want to manage it myself? Maybe I've just retired or I work from home and I just want to have the satisfaction of leading the project to a completion. I wanted to know, are self-managed projects different?
Self-managed projects from an insurance point of view, particularly a liability point of view, are massively different. You only have to look at something like grand designs to see what can and does go wrong when even people who are perhaps associated with the building industry start undertaking a building project, let alone somebody who's got little or no acquired knowledge. So when you make a decision to self-manage, and normally that will be manage a suite of bona fide subcontractors, so that's people who are not employed by you directly in the same way that a PAYE employee would be employed directly, but these people are people who run businesses, who've quoted for the job, who charge VAT, who've got their own insurance, all of that sort of thing. They are bona fide subcontractors. When you get into that situation, you are effectively standing in the shoes of a main contractor. Okay, so if you employ a main contractor will employ all of those subcontractors that they need for things they can't do themselves, okay, or specialists they need, and they will insure that under one umbrella situation, which is their liability cover. If you take on that role, which is what you're doing, even though you're not doing the physical work yourself, you put yourselves in the shoes of the main contractor, and you also open yourself up to things like health and safety law and all the liabilities that go with that. And I'll give you a for instance when something happened really quite badly on a site. So you're then in a situation where you have to think far more broadly. So you probably need to employ a health and safety consultant. You probably need to employ a project manager perhaps to work for you to manage all the contractors if you don't know what you're doing. And the savings that you're making are sort of disappearing all the time, but one of the unseen killer costs is going to be the insurance, because instead of just needing property owner's liability, which you would if you were letting a main contractor do it under a JCT contract, you need the same type of insurance cover as a proper contractor would have, which is full public and products liability. Okay? And those have very different cost implications. Now, I said I'd talk about when things don't go right in a liability situation. We had a client who'd actually employed a main contractor, but he'd also employed his handyman, the sort of retired guy who paints your windows and cuts your lawns and sweeps up leaves and that sort of thing, to go round the site at weekends and tidy up. And as an insurance underwriter, you think, well, that's great, because a lot of contractors are unbelievably untidy, and that's how fires start and all those sorts of things. So you think on the face of it, that looks good. The person who was specifying the contract had had a lift shaft put in, and I think it was for their retirement. And the man was upstairs walking around tidying up, and the contractor had put a tarpaulin over the top of the lift shaft, but hadn't put up any warning signs.
I'm going to put a warning sign up here. What you will hear next is shocking and distressing.
And unfortunately, he fell through that down to the bottom and was killed instantly. He was retired with no dependents, and so from a financial perspective, it could have been a lot worse. But the person who specified the building contract has got to live with what happened. The building contractor concerned ended up with a prosecution from the health and safety executive and a substantial fine. That'll be a percentage of turnover. When you're successfully prosecuted by the HSE, and I'll come back to the self-managed project now, that conviction is a criminal conviction. And it's something you'll have to declare for 10 years until the Rehabilitation of Offenders Act takes that conviction away. And trying to operate with a criminal conviction, trying to buy insurance, finance, that sort of thing, is unbelievably difficult. Let alone the moral and emotional implications of an accident like that happening. It can ruin the rest of your life. So it's another really good reason for, I would say, unless you're hell-bent on doing it and you're in the building industry, or a structural engineer or an architect, or somebody who's close to it all the time and actually understands what the risks are, I just wouldn't get involved.
Sage advice from Douglas Brown, MD of Renovation Underwriting, ending this episode of Renovation Uncovered. Douglas is back with me for the final episode of this series, where he shares his magnificent 7, his top 7 tips for renovation success. Don't miss it.